Hey folks, TRREB comes in with its March results. We're going to dig into them and see what's going on in the Greater Toronto Area real estate market. And CIBC has a $52 billion portfolio of variable mortgages where payments aren't even covering the interest cost. We're going to talk a little bit about that and a few other things, including a grab bag of questions from followers and viewers that have been asked this week. It's episode 125 of the Wise Old Owl Show. I'm Vince Gaetano. Thank you all for tuning in on this beautiful Thursday afternoon. So we're heading into the Easter break, and yesterday, TRREB, Toronto Regional Real Estate Board, came out with their March numbers. Now there is a tremendous amount of hoopla from realtors on social media claiming the market's going bananas, and I want to drill down into what all the fuss is about, because what we're seeing in the office isn't corresponding to what everybody's excited about. Okay, a lot of bidding wars, a lot of activity, but let's drill down. So here's what TRREB reported. There were 6,896 sales that took place in the month of March. Okay, that is the lowest total in 10 years. Okay, so what's all the excitement? What's all this upbeat, feeling about the market? Where are these folks? I'm a little bit concerned. So everybody says, well, Vince, there's not a lot of listings. Okay, let's dive into the numbers. So the active listings in March were 10,120. And last year at this time, the active listings sat at 10,157. So only a drop of 0.4%, almost flat. And last year we had 10,862 sales. So something's not adding up, folks. And this is what has taken place the last 10 years. So this March we had 6,896 sales. Last year we had 10,862. 2001 we had 15,600 and change. 2000, 8,000, and that was the COVID month, if everybody remembers that, when everything kind of shut down. It was busier back then. 2019, 7,132. 2018, 7,228. 2017, 11,900. 2016, 10,300. And 2015, 2014 had 8,800 and change and 8,100 or so. Okay, so something's not adding up. We got more immigration that's poured in over the last 10 years. We got a bigger population, yet we had a record low in the past decade of only 6,896 sales. So why is everybody excited? I think everybody's on social media. Everybody's trying to trump this up as to something it's not. And the reality is people are struggling. People are really, really struggling. And I do believe that this market is being kept together with duct tape. And I'm going to explain. Okay? CIBC this week announced that they got $52 billion in variable mortgage that have static payments. And that means payments don't move as rates go up. And 52 billion of those mortgages are not covering the interest cost that's due every month. So to me, as a former lender, I would deem that in arrears or impaired. But they're not going to be reporting it that way because the product is not deemed in arrears because the client is following the contract, and that is the payment is fixed. And if rates go up, they haven't had to adjust to the same amortization, and we're seeing amortization levels hit record numbers. So CIBC is one of four of the big banks that offer static payments. So if there's $52 billion of mortgages that aren't meeting the monthly payment obligation and nobody's doing anything about it because the federal government has announced in the budget that they're giving banks the ability to extend amortizations, use tools to help these folks, and not have to put these folks in dire straits, okay? So we're kicking the can down the road. We're seeing amortization levels in the 70, 80 years. I saw one come through the office at 92.25 years. Like, it's just ridiculous, folks. So what does this mean? This means that there's people that probably, if they had to adjust their payments, wouldn't be able to afford their home anymore. And that would cause a flood of listings into the marketplace. But the government's allowed these banks to duct tape all this shit together and prevent these people from having to make the payments that they're obligated to making or should be making, okay? OSFI does have a policy that the maximum amortization is 30 years, but in these cases, they're all exceeding that. We saw CIBC announce during their quarterly meeting to their investors that they have $72 billion in mortgages where the amortizations exceed 30 or 35 years. I can't remember the exact amount, but it was $72 billion. And now we hear that $52 billion of this stuff isn't even meeting the minimum interest cost. Now, Royal Bank, they're suggesting, well, as long as you're making $2 towards principal, you're good. That's like an infinity plan, right? Like, this is like a Buzz Lightyear mortgage where, you know, to infinity and beyond. Well, you're never going to pay it off. Might as well just go to interest only, for crying out loud. So this is really causing an interesting scenario because there's a false sense that things are good, and they're not. Values are not necessarily going up at the level that people think they are. And I'm going to read a comment from MarketWatch, which is the report that the TRREB puts out. And it says, the average sales price was above the average list price for the first time since May 2022. Now, for fuck's sakes, this is the biggest bullshit I've ever seen in my life. Every realtor is using the tactic of lowering the list price to gain activity and multiple offers. So of course you're going to sell it for more than the list price. Like, who are these people trying to fool? Like, it drives me absolutely bananas because there's this false narrative out there that everything's fine. Now, here's an interesting comment from Chief Market Analyst and TRREB Prognosticator Jason Mercer. And I say that tongue-in-cheek, okay? But this is what he says. Lower inflation and greater uncertainty in financial markets has resulted in medium-term bond yields to trend lower. This has and will continue to result in lower fixed-rate borrowing costs this year. Lower borrowing costs will help from an affordability perspective, especially as tighter market conditions exert upward pressure on selling prices in the second half of 2023. Now, folks, I don't know about you, but the carbon tax just kicked in on April 1st, and the pumps gas prices went up 15 cents overnight, which means inflation's not moving in the right direction. And borrowing costs are continuing to wreak havoc on people. So how is inflation going to be curbed? How is the Bank of Canada going to still sit and pause when the feds are increasing rates and there's more pressure to follow suit? I don't buy it. And I'm not trying to be, negative Nelly here. I'm just trying to help people figure this out. And it's going to be very interesting to see how the second and third quarter behave. Now, what I do want to point out to everybody is that in this business, in the mortgage business, for the last 20, 30 years, I've always used a rule of thumb. And that rule of thumb is the volume of business that you do is broken down in quarters in this fashion. You do 20% of your volume in the first quarter, 30% in the second and third quarter, and 20% in the last quarter of the year, okay? Now, as people who watch the show know, there are 1.1 million mortgages that are coming up for renewal in 2023, which means using that rule of thumb, there's going to be 60% of those $1.1 million mortgages coming due in the second and third quarter. This is where it's going to get really interesting. And we're going to see how many tools these banks are going to use to help these folks that are coming up for renewal. Okay? Every one of them is going to see their interest rate possibly double, if not 2.5 times what it was from their previous term. So there's going to be a payment shock. Now, folks that bought 5 years ago, if they were prudent and they made all their payments on time and used accelerated prepayment policies and bi-weekly accelerated payments, they're going to be fine, because the average price of homes in 2018 was about $784,000. So they've seen the upswing in values, and hopefully their balance isn't as significant as it could be in today's marketplace. Okay, so they're not carrying as much of a balance as a person who bought last year or 2 years ago, who bought at the peak. So it's interesting. It's going to be really interesting to see how these people adjust their discretionary household spending when they have to use more of their funds to service their debt, because their payments will be going up unless these banks are going to allow them to just make interest-only payments, which I highly doubt, because it will be a negative impact to their stock and to their cash flows if that's what it is. It's going to be really interesting to see how this is going to play out, and I'm just waiting, and like, I hope it all turns out well, and I hope things turn around, but it's going to be a bloodbath, in my opinion. It's going to be bumpy. That's why I brought the hockey helmet up. Everybody better tighten the chin straps, put that helmet on. It's going to be a bumpy ride. And we're going to go to the grab bag in a minute, the grab bag of questions, because we've got a few questions we're going to answer. We're going to pull out of there. There's a couple questions here. A lot of people today. Johan, thank you for the comment. The Bank of Canada will bankrupt this province worse than ever. Well, I think it might be the country. Why is our job numbers going up? Do you think Bank of Canada will raise at the next meeting credit tightening cycle? Okay, so the next meeting is next week. I think it's on the 12th. Why are the job numbers going up? I have no freaking idea. Like, they're not the best paying jobs, because a lot of companies are laying off. Okay, so I'd really like to drill in and find out which jobs are actually being created and at what rate. I would assume, and I could be wrong, prove me wrong, that a lot of these jobs are lower paying jobs. Okay, as people look for part-time jobs, people are looking for additional income to keep up with their payments. I think those folks that are now being stressed from cash flow issues are probably looking for jobs that stay-at-home parent may have to get up off the couch and have to look at getting a job. I think that's what's pushing it. But, time will tell. We'll see where it goes. But we are heading into a recession, there's no doubt. Okay. Before I get into the grab bag, I want to cover a couple things. Number one, the used Porsche tracker. Everybody asks me about this. Where are we at? And for those that are new to this, back in September, when things started going off the rails, I figured as things get tighter, people get rid of their toys. So I used the data point of used Porsches for sale on AutoTrader, which are being sold 100 kilometers from where I sit at Dufferin and Orphis. If you go to their website, you could do a postal code search, use a radius of 100 kilometers, and you'll get the number. And you could check any brand. So I just used Porsche because I got some Porsche t-shirts and thought it'd be kind of cool. The low back in the number back in September was 944. It went up to as high as 1,136 or 38 back in early February, and now it's sitting at 1,066. It's up 13.2% from that point when we started back in September. So, it's been flat. I think it was 1,069 last week. It's about 1,066 right now. So, it's been flat the last few weeks. The bond market last week was just over 3%. It's now sitting at 289. But we're not seeing a lot of discounts from banks on their rates. We're still seeing relatively high rates We're waiting for this spring market competitive situation to come upon us. Usually by now, we're seeing rate sales from banks. We haven't seen it yet, and we're anticipating that maybe after the long weekend, we should probably see some rate sales, but nothing's happening, folks. It's been pretty dry. I'm gonna go into the grab bag. So, got a bunch of questions. We'll pull out a few, I'll answer them. If you guys have any questions, please answer them. So let's get right into it. So, get the first one here, and it is Chris Turcott, old friend from the West Coast. Bonds are on the move. How low of a fixed rate will we see in the next 30 days? Very good question. We're not seeing a lot of high ratio mortgages. These price points in GTA are primarily over $1 million. A lot of the condo purchases are traditionally investors, so they don't fall into that high ratio bucket. But we're seeing rates in the low to mid fives on 5-year money. And in the next 30 days, we're hoping that they approach that 4.99 level, low fives, but nothing's moving. It's just getting really tough. Let's get another question. This one from Dominic Di Clemente. Which will we see average prices for detached homes appreciate more by year end? 905 or 416? I'm going to say 416. The core has always been quite stable. Okay, the bedroom communities aren't moving as much, but everybody wants to be in the city. The city homes are going quite quickly, and I'm going to suggest that probably you're going to have a better appreciation in the city. Got another one here. For those that know me, brought the hockey helmet in, tighten the chin strap, wear the helmet. It's going to be bumpy over the next little while, so we'll use that as our grab bag little thingamajig. Realtor_Siva. How do you feel about the market? Why are people going on crazy buying sprees? Okay. I think the market's flat. I think the market is seeing some FOMO again. I think realtors are doing a very good job bringing in multiple offers by underlisting homes relative to their market value to get those people in and get that pent-up demand to try to get a little bit more than what market is. I think realtors who are doing that are doing a very good job. But if you are a qualified buyer, you're not you're in an abnormality today at these qualifying rates. Okay, we had a couple lenders in today telling us what qualifying rates are on HELOCs, for example. Some lenders, you have to qualify at the prime plus a half plus 2, which is 9.2%. You have to qualify at 9.2% to get HELOCs today. Okay, so it's very difficult to qualify. So there's not really a buying frenzy. There's activity, and as I pointed out at the top of the show, the number of sales that took place in March of 6,896 are the lowest in the last 10 years. And everybody says, well, Vince, there's not a lot of listings. The active listings for March of 2023 was 10,120. The active listings in 2022, when there was 10,800 listings, was 10,150. So the active listings are flat. Realtors are doing a very good job marketing and letting people believe that there is a frenzy of activity out there, but the sales aren't proving that. We are seeing people who buy with financing conditions pull out of the deal. We're seeing a lot of that. People can't qualify and they're starting to realize they got to move to the alternative space, and with higher rates it doesn't make sense for them. So you got to be really careful what you believe, okay? And get a better feel of what's out there by drilling down, doing your due diligence, and making sure the perception is not the reality, okay? So hopefully that's helpful. I don't know if anybody has any questions. Did I miss anything? Will the Bank of Canada raise rates at all any further? Experts are saying nothing for the rest of the year. Well, Here's the problem investing in Ontario. If inflation does not get under control, and I am suspecting that it won't, okay, because with the new carbon tax, it's driving up further inflation for fuel and stuff like that. Like we saw the pumps go up 15 cents on April 1st last weekend, and with the government printing more money with these grocery rebates, that's adding more fuel to the fire. So inflation's going to be a problem, and if it does continue to sit in the 5 to 6% range, the Bank of Canada is not going to have any choice but to add an additional increase to the overnight lending rate. So for those folks that believe that the Bank of Canada is going to be reducing any time before the end of the year, better get their head examined, because I don't see it happening. I hope I'm wrong. I sure as hope I'm wrong, but I want to be real with people. And there's talk that inflation is not going to be under control until 2025. That was the latest number. First it was the end of this year, then it was 2024, now it's 2025. We're a year and a half, more than a year and a half away from the beginning of 2025. So going back a couple months, I talked about duration and how long this period could last. And it could be a very long time. So just be aware, be prepared, start planning, start budgeting, start trying to figure out ways to get you through this period, because it could be longer than people anticipate. And this recession is going to be painful. I'll leave it at that. We'll take one more from the grab bag. A Gosher. Why are mortgages getting expensive? Banks don't have first home savings account yet. Why? Okay. Mortgages are getting expensive because the bond rate's rallying. It's going up. The yield curve is inverted. Short-term rates are significantly higher than long-term rates. And there's a lot of risk premium built into these lenders' margins. Okay, so that's problematic. As far as why don't banks have the first home savings account yet, banks aren't moving fast. Okay, they're slow as molasses. Okay, this was announced about 7-8 months ago, I think at the previous interim budget by the feds, and I just don't know if banks are really attractive to it, right? Like, if it was that important, they'd have it done. But, try to find out which banks do have it and take advantage of that. But at the end of the day, they're just not moving fast. Technology's a bear, and it looks like maybe it's, staffing issues, getting approvals. Things aren't moving as quickly as they used to. So work at home may be the issue to that one. But I'm not sure if there are any other questions today. But what I do want to say is this. We're heading into the long weekend. We're probably going to see some family and friends over the weekend. And I think it's really important that we all be kind to each other. I made a joke the other day. There seems to be a lot of people doing this interim fasting. And I joked about maybe they're not necessarily doing interim fasting, they just can't afford a lunch or they can't afford a breakfast, and they're just cutting a meal out of their diet because everybody's clamping down and budgets are getting tighter. But, all kidding aside, we have to use kindness in these days, okay? If you have the means to help anybody, please do. Friends and family members and work colleagues aren't necessarily going to tell you they're struggling. They're going to try to hide it. This isn't something they're proud to talk about. And I think it's incumbent on us to look for signs. And if you could buy somebody a lunch, if you could give somebody a helping hand, please do. Be kind. There's a lot of people struggling. And if you could make a difference in their lives, it can mean a big deal. So I really encourage everybody to give a helping hand when you can. And let's hope for the best, and let's try to walk hand in hand together and give it as many people a shot at making it through this as they can. It looks like there's a few more questions here before we wrap it up. Investing in Ontario asks, some of these recent sales are rivaling peak prices from 2022. This balloon has to burst at some point, but government's saying they will backstop banks allowing them to go over amortization. Yeah, it is, but be wary of the peaks. The peaks aren't there yet. The peak in 2022 was 1,298,66, so almost 1,000,003 was the peak. We're at 1,000,001, so we're still $200,000 on an average price basis off the peak. So we're not there yet. We're still down 20 points, almost 20 points. So be wary as to what you're listening to out there. Look at the numbers, and if you want, go to the TRREB, TRREB Market Watch. They archive all the reports. That's where I get my information. It's right from the horse's mouth, and take a look at it. And it drills down by area. So you could really find out what area is doing well and which one isn't. It just takes a little bit of vetting through the numbers and comparing and looking at different types of reports and dates, but you could get a lot of information out of this stuff. KZ067. How's the private mortgage lending space? Many investors pulled out last year when Bank Canada started raising rates. The future still looks ominous. Well, the private mortgage lending space is very interesting, because many folks that run these private MICs are not getting the payouts at the rate that they're used to. So I run a mortgage investment corporation in addition to Owl Mortgage. And one thing that I could tell you is in the past, about 70 to 75% of the mortgages every year would come up for renewal and they would pay out, because they're designed to be a temporary tool. They're usually designed to be a one-year term. I call them Band-Aid and bridges. They're Band-Aid solutions. They're bridges to get you to somewhere else within that year, and then you're out. It's got to be temporary. It shouldn't be long-term. Nowadays, it's reversed. Only about 20-25% are paying out. The rest can't get out. They can't sell. They can't get refinanced. They can't rehabilitate to an alternative lender, because traditionally, there's a progression that you go through. If you're in the private space, you're going to graduate to the alternative, and then from alternative you graduate to prime, which is the A lending space. Nowadays, with the erosion of values and the tightening of credit and the stress test at the level of interest rates that we're seeing, everybody's moving backwards. We're going from people in the A lending space that can't get approved elsewhere, they got to go in the alternative, and alternative folks are going into private. So we're going backwards. Not a good sign, and it's really causing a liquidity problem, because we're not seeing the turnover of those payouts. And when you have the government using duct tape to prevent people from having to deal with their obligations the way they should, it really causes a strain, and it provides a false sense of success for some people that probably should play out in a different form, okay? And I'll leave it at that. I'm not going to judge the policy, but I'm just telling you what's happening. Yeah, the balloon will pop at some point, and I think we're getting close to it. Happy Easter, Vince. Thanks for always being here. Thank you very much. So we got one more. Jeff Sampson. Jeff Sampson, congratulations. He just had a little boy, a little bit premature, was in the hospital for a while, and he's added to his family, and now has the millionaire family, right? The $1 million family, a young girl, a young boy, and glad he's here, and glad that mom and the baby are doing well. Congratulations. Well done. He's from out west as well. Always loved the whole nation coming out to watch this. All right, well, happy Easter to everybody. Happy holidays. Again, be kind. Blue Jays are doing well. The Masters are on. Like, this is like sports euphoria right now this weekend, and we got the extra day of rest. So, folks, to everyone that watches, I want to thank you all for your support. 125 episodes. I can't believe it. This is unreal. And it's all to you folks. Thank you. Thank you for encouragement. Thank you for always showing up every week. I remember when we started, I think we had 12, 14 people. Now we're up to 50, 60, 70 people, depending on the week. And it's a beautiful day out there, and you're watching me. Folks, thank you. I really appreciate it. I do it for you. Continue with the questions. DM me. We'll put them in the grab bag or the hockey helmet, okay? And as I tell you every week, tighten the chin straps, put on the helmet. It's going to be a bumpy ride. Let's all get through it together. Have a great weekend. Bye.